This is your LMAX exchange technical update for Thursday, June 8th, 2017. Euro dollar. So the euro run in 2017 doesn't look like it's over at this point, with the market quite capable of extending this run up towards next key resistance in the form of the August 2016 peak at 113.67. And if we get up there, the market is coming into some significant medium-term resistance just above in the 115 to 117 area. And so the risk for additional upside in the euro is quite high, with any setbacks seen very well supported. At this point, it would take a break back below 111.10. That's the low from the 30th of May to take the immediate pressure off the top side. Sterling dollar. So cable has done a formidable job of consolidating gains above that previous range high that had defined the market for so long at 127.75, defined the top of a range off that plus 30-year low. The breakout that we saw in April above 127.75 now opens the door for the next major upside extension towards an extension in the 135 area. This follows a consolidation that was seen roughly between 120 and 128, and so that break above the 127.75 area opens that measured move that takes us up again to a measured move up towards the 135 handle. There is risk that we see a corrective pullback, but any correction should be very well supported now into the 125 area, with only a break back below 123.60, that low that we had seen all the way back on the 10th of April, to take the immediate pressure off the top side and delay this newly adopted constructive outlook for sterling dollar. Dollar yen. So dollar yen has come under pressure over the past several days, with the market trading down towards the 2017 low that was seen back in April, just shy of 108. At this point, any rally should be very well capped ahead of 112, with only though a break back above 114.37 to force a shift in the structure. Euro Swiss. So Euro Swiss has recently stalled out ahead of a critical psychological barrier at 110, and the market now is rolled back over, with the possibility for an acceleration of declines from here towards some critical medium-term support ahead of 106. It would take a break back above 110 for the market to force a meaningful shift in the structure and open the door for medium-term to longer-term upside. Until then, again, the pressure does remain on the downside. Aussie dollar. So Aussie has seen a nice rally over the past few sessions, though the market is now coming up to some significant internal resistance around the 76 handle and should ideally remain capped below that 76 handle ahead of a fresh lower top and resumption of declines back down below recent support that was seen around 73.30, which would open the door for a downside extension back towards December 2016 lows at 71.60. Dollar CAD. So dollar CAD is looking to carve a higher low now after the market stalled out in the 133s. This higher low would be a higher low above a previous confirmed higher low at 132.20 in favor of the next major upside extension back above the 2017 high at 137.94, exposing that extension through 140 and towards the 142 area. At this point, only back below 132.20 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has seen a nice run since breaking out above some key resistance around the 71 area, but overall the market could still very well top out into the 72.50 resistance that it's coming towards, with the market not expected to establish above that level and instead stall out in favor of a resumption of declines. If we do see the market establish above 72.50, that would suggest the market could be on pace for a retest and break of the 2017 high at 73.76, which would then be a significant development. SPX 500. The S&P 500 has recently broken up to fresh 2017 and record highs above 2400. The market has traded up to about the 2440 area thus far, but following the break of 2400 several days back, and after the market had found a base at 2320, that 80-point consolidation that we had seen that was broken projects 80 points to the top side, taking us up towards the 2480 area in the days ahead. It would take a break all the way back down below 2320 to force a meaningful shift in the structure, while on a short-term basis, we need to see a break back below 2400 to take the immediate pressure off the top side. Gold. So gold has enjoyed a nice rally over the past several days, with the market just squeaking out a fresh 2017 high above the previous 2017 high at 1296. Any setbacks from here should be very well supported, and a fresh higher low is now in place around the 1215 area in favor of that next major upside extension to retest the 2016 peak at 1375.